if we lump gambling in with investing, you're not going to be attracting people to investing who you should be encouraging to invest, people who are interested in long-term investing or investing for retirement or saving for their child's education or something like that. And it's worth mentioning that Barclays ran a calculation and they believe that the election product will be worth very little in terms of revenue. So it really is just kind of a gimmick to get users in the door. And I don't think those are users who should be drawn into a Robinhood type world. Those are users who are going to lose money, who are going to make Robinhood money. And it's a lose win, if you will. And I saw a really great article that was published in The Verge, and they had a poll quote from Robinhood that was basically trying to say, oh, launching this product is an effort to democratize access.
Yeah. To like real world events or something like that, was it?
Yeah, to real world events.
That's just betting. Like, just say what it is. Do you know what I mean?
Yeah. And also, the democratization of access to the election is voting. Like,
that's so true, actually. Democratizing. Sorry, I'm thinking of like it too literally when I'm saying that's betting. No, it's like you can just be part of this thing. That's what they're saying.
yeah.
Robinhood is giving access to be part of this. Hi there, and welcome to another episode of Stock Club. I'm Mike, and joining me today is Anne-Marie Kingsland from the MyWallSt team. Anne-Marie, how are we getting on?
I am good. How are you doing?
I'm good. I came across a very, what's the word? Not Schadenfreude, but like makes my investing mistakes feel a lot better yesterday. Yeah. So listen to this. We take the piss out of Masayoshi-san a lot. He is one of the more interesting investors out there. Famously, like, invested billions and billions into WeWork. But he was on a summit the other day, and he was chatting about NVIDIA. He said NVIDIA could be undervalued, and that it's not ridiculous to think that there will be $9 trillion spent in AI compute build and yada, 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 yada. So in February 2009, Masayoshi-san at SoftBank sold his entire NVIDIA stake so he can put an additional 9.5 billion into WeWork and 300 million into a dog walking startup. Since then, NVIDIA is up 37x. he missed out on $170 billion to put it into WeWork. And what was the dog walking app? Wag? Is that it?
Nice.
Yeah. And most of that money was from the Saudi public investment fund as well. So they're just watching him now 5 years later talk about NVIDIA, be like, yeah, really think this up and comer has got what it takes.
Yeah. I mean, dog walking could be worth more than NVIDIA. I mean, just there's so many dogs and they need to be walked, and that's recurring revenue, you know, every day they need to walk.
Yeah. So if you're ever feeling bad about missing the boat, there is or not even missing the boat, about selling a stock too early, there is the worst possible
that's
example.
Sinking the boat. So that's not missing the boat. You got on the boat, you sunk the boat, and then you swam back to shore, and then it turns out you didn't sink the boat. It's gaining speed even faster, and then it circumnavigates the globe, and you're going, oh man.
Yeah. And then you bought a ticket on said boat 5 years later for 10 times the price. Yeah. So $170 billion down the drain for Masayoshi-san if he just sat and waited. Okay, where are we going first? I think we'll start with Robinhood. People people are sick of hearing about the election. I know I am, but this isn't really about the election per se. It's much more about Robinhood. So they haven't called it gambling, but they've opened a future contracts market on the US election.
Yeah,
essentially.
Yeah.
This is a very strange move for a company that's trying to rebuild a reputation. What's going on here?
Yeah, it is a pretty weird move. I went back and had a look in October of 2021 when Barron's ran a headline saying Robinhood wants to be taken seriously. Its business model says otherwise. And it opened with the fact that on its latest earnings call, Robinhood's executives mentioned safety a dozen times and only mentioned Dogecoin, the joke cryptocurrency, that had been a major driver of its recent earnings just twice. And of course, Dogecoin was so important to Robinhood that it got several mentions in the 2020 IPO documentation, where the fall of Dogecoin was identified as a significant operational risk because that is how dependent they were upon the revenue growth. And so, in an attempt to be taken seriously, Robinhood rolled out a number of goodwill features to try and measure up to, Fidelity and Vanguard and Charles Schwab and those more reputable brokers. And it funded a financial news site, Sherwood News. It promised a 1% to 3% match on retirement accounts if you rolled them over to Robinhood. And then it set up Robinhood
Yeah,
Gold. It gave premium.
that was wild, by the way. People
Yeah, that is
were
pretty
making
solid.
hundreds of thousands of dollars by just switching accounts.
Yeah, apparently they need to gradually pay that off in the next 2 to 3 years. I don't think they
Yeah,
were anticipating quite so many people to jump ship.
literal
And
free
then they
money.
set up, yeah, genuinely. And then they set up Robinhood Gold that gave premium saving rates and annual IRA top ups to members willing to shell out for the $5 a month. So 60 a year. That's pretty solid. And then they go and launch this. And it makes you remember that Robinhood can't really make any money unless you're trading meme stocks at just an impossible clip. Because as we all know, Robinhood's bread and butter, the way that it makes revenue, is payment for order flow. And this means that you are most valuable to them if you are a high volume trader, which no individual investor should really be, if we're being honest. And another reminder of this is just 2 weeks ago, they announced the launch of Robinhood Legend, which is a desktop app designed for day traders, which is just phenomenal. I'm so happy for them. And this undercurrent, it's just another reminder that Robinhood is never ever going to be satisfied by your Roth IRA or your IRA or your 401k or you making your monthly contribution to the S&P 500 index fund because they can't make any money off of you. You're not worth anything to them. It's not like Vanguard and Fidelity where at least they're going to be collecting an expense ratio on, your VOO or the Fidelity equivalent, which is like FIDX something. They're at least getting the 0.02% to 0.03% off you, even if all you're doing is buying an index fund. And that allows companies like Vanguard to collect nothing on payment for order flow. It's like right on the main part of their website. It basically, under their client first philosophy, they don't take any money for that because they feel like it's immoral, which is crazy because that's Robinhood's entire business model. And so to now have this essentially like election gambling lumped in.
I don't think you need to even qualify it as essentially. It is gambling. Like it's
gambling.
It's
Yeah.
not a future derivatives contract on an event that's happening in 5 days. It's not it. Like it's just pure gambling.
Yeah. And so again, it's just a thing of like, if we lump gambling in with investing, you're not going to be attracting people to investing who you should be encouraging to invest, people who are interested in long-term investing or investing for retirement or saving for their child's education or something like that. And it's worth mentioning that Barclays ran a calculation and they believe that the election product will be worth very little in terms of revenue. So it really is just kind of a gimmick to get users in the door. And I don't think those are users who should, be drawn into a Robinhood type world. Those are users who are going to lose money, who are going to make Robinhood money. And it's a lose win, if you will. And I saw a really great article that was published in The Verge, and they had a poll quote from Robinhood that was basically trying to say, launching this product is an effort to democratize access.
Yeah. To like real world events or something like that, was it?
Yeah, to real world events.
That's just betting. Like just say what it is. Do you know what I mean?
Yeah. And also the democratization of access to the election is voting. Like
that's so true, actually. Democratizing. Sorry, I'm thinking of like it too literally when I'm saying that's betting. No, it's like you can just be part of this thing. That's what they're saying. Yeah. Robinhood is giving access to be part of this.
Yeah, because their whole draw is, we're giving access to American citizens. American citizens already have access to elections. That's actually kind of the whole point.
Yeah.
Come on.
Yeah.
Oh, I just can't stand it.
It's a weird situation because Robinhood is, for so many people, their entry point into investing, which we love to see because it brings in new investors. But in everything it does, it's promoting a style of investing. I wouldn't even call it investing. It's promoting a style of gambling, short-term bets, options trading, crypto trading, high frequency trading, that none of that computes with what investors should be doing. And more than likely, you're talking about bringing in new customers through what is essentially a betting product. What are they going to do when they stay on Robinhood? They're not going to just be like, oh, well, I'm here now. I better dollar cost average into the S&P 500 for the next 40 years of my life. It's not what's going to happen. They're going to do...
I should finally set up my Roth IRA while I'm here.
So yeah, it's a pity because Robinhood should stand for something very positive in the financial world, and it just continues to operate in a way that isn't, I guess.
I know, and it is frustrating because when I went and look at like users reflecting on the decision on forums, a lot of the stuff they were talking about is they were like, well, Robinhood has done a really good job building a user first platform in terms of design. Like people say that the app is easier to use in comparison to Vanguard's app or Fidelity's app, and that's great in terms of accessibility because I do think there is a huge burden that users have to bear. If you log into Fidelity, it's such a complicated
Oh my
app, and if
god,
all you wanted
I
to
used
do on there
I
was
use
buy
into
an index fund, it's hard.
I use interactive brokers for buying European stocks, and it is a mess.
Yeah,
It looks
it's
like
really difficult.
you know when in the Matrix and all the numbers are floating around. It literally looks like
Yeah,
that.
yeah.
And it's like, I don't know
Yeah,
what button to press here. And they're giving you contracts,
yeah,
and it's like, literally, I just want to buy X stock. It's nonsense.
yeah. Even just navigating to really easy stuff is made difficult, and so there is definitely an opportunity in the market there. Just be like, listen, we are the clean cut, easy to figure out brokerage app, and I think
Yeah.
that is where like Robinhood is kind of set up. But stuff like this, that kind of just nefarious undercurrent that they have going on, is just a complete. Oh, it's just not nice.
Yeah. Okay. Where are we going next? Do you want to?
I You want to talk about golf? We go. Oh,
Yeah.
it's a real slow man day here at Stock Club.
I
Um,
never thought I'd get this opportunity. If someone asked me, "Do you want to talk about golf?"
I know, but to be fair, this is a stock we've talked about a good bit, so it'll be good to check back in with it. Callaway,
Yes.
big bet on Top Golf, has come to a disappointing end.
Yes.
You want
So
to talk about it?
it's a very easy topic for me this week. I was researching something else. I was researching the MySC, or what's it? Intercontinental Exchange is the parent company.
Yeah, yeah.
They were looking to go 22 hours trading,
Hmm.
which I thought was a meteor story than it is, and it's kind of not really going to affect too much bar foreign investors and people who might want to trade after they get home from work. So I
Hmm.
changed it to a story I was just reading anyways out of personal interest, and that is the Callaway Topgolf kind of debacle.
Hmm.
Look, I'm guessing I see our demographics for this podcast. We're going to have a lot of golfers listening. I imagine they probably don't need much of an introduction. Topgolf is this interactive driving range slash sports bar that became very popular, especially in America, but it has international venues as well.
Hmm.
Callaway is one of the largest equipment manufacturers in the industry. There's probably a big three: Titleist, Callaway, and TaylorMade. Titleist is actually a public company under the company Acushnet is the parent company. TaylorMade's privately owned. There are plenty more out there: Mizuno, Ping, Cobra, loads more. But it's fair to say that they're probably the top three in terms of revenue, in terms of scale. So this all harkens back to basically golf's purple patch, I guess, which was happening before the pandemic, but really kind of turned up a notch since 2020. Not on the professional side of things at all. It's a hot mess there, and that's another podcast. I don't think I'm going to be able to talk about that on this
Hmm.
podcast, but on the amateur participation levels, it's never been better, and it makes sense. People had more time on their hands. They're taking advantage of working from home. They wanted something to do that was outside and safe, and so internationally and then in the US, the number of adults who've played golf is shot up. So outside of the US and Mexico, these are split up because they have different governing bodies. So the RNA does outside the US and Mexico, and then the USGA does US and Mexico. So that's why the stats are in two
Hmm.
cohorts basically. But so outside the US has gone from 29 million in 2016 to 43 million in 2024. There's 62 million people who've consumed it in some form or another, either playing on a golf course or what we're going to get into, doing driving ranges, golf simulators, or something like Topgolf. In the US, it's growing even faster. The last 10 years have seen more than 2 million beginners start the game, with the past four topping 3 million. 45 million Americans aged six and over have played golf either on course or off course in 2023. So if you're looking at those figures and then you're saying, okay, there's 18 million people who participated exclusively in off course golf activities. You know, that's in America. There's another there's another 19 million that did it outside of America. That's almost 40 million people who golf but don't play golf on course. They aren't a member, don't have a handicap, whatever else, but they're still in this vicinity. And that's what the execs at Callaway saw in terms of targeting a company like Topgolf. So they invested early on. They were always an early investor, but to go and make the jump for the full-on acquisition was kind of reading the tea leaves and saying, okay, well, we have this untapped market of 40 million, say, non-golfers who golf. How do we get after them and kind of, I guess, reach something that's been away from us for so long? Because that's a huge number. It's not like they're going to be buying a new set of Callaway irons to go to the range twice a year or go play pinch and putt. So to get after this market, Chip Brewer, which is a great name. It's a great name. Anyway,
solid.
Like if my friend was called Chip Brewer, I'd just ring him on the phone once a week to say his name. But apart from that, if you're going to be a golf company CEO and your name is Chip, an even better name. So that's when he made the decision to acquire Topgolf. And from there, that was March 2021. In the past 3.5 years, it's gone downhill since.
All right. Well, I'm guessing by your disappointed tone there that things did not go well overall.
No. So March 2021, the merger was completed, and with a lot of great fanfare from a lot of people. Callaway even changed its name from just Callaway to Topgolf Callaway brands. So it showed intent in how much of an impact Topgolf would make, and it came in straight away. It was almost slightly less than 50% of revenue once the merger was completed. Topgolf was growing at 30% year over year. Obviously, Callaway thought this was going to happen forever. It had plans to open 10 new locations every year. And then Callaway, which I think was a $6 billion company at the time, it even made projections based on cash flow multiples and all the rest that it could very easily achieve a $15 billion valuation in the near future based on Topgolf's new revenues and its growth rate and all the rest. Obviously, this is not what happened. In the most recent quarter, Topgolf same store sales were down 8% year over year. A lot of this comes down to macro factors, inflation, a lot more penny pinching, especially when you consider that for something like Topgolf, an awful lot of this would be corporate outings. So the kind of work night out, that was going to fall off probably first. If you see cutbacks and all the rest, that's the first thing that's getting cut. So I guess what it really exposed is that while Topgolf is golf adjacent, it's also not really. Do you know what I mean? It's much closer to a sports bar than a golf course. And this really came out in the wash in the last 3 years when there was an earnings call in last year or the year before, and our boy Chip, he said, this is a quote, "I never thought I'd actually be listening to the cost of chicken wings going up, but evidently they did." Like, objectively, that's just a funny throwaway comment, whatever. But it's so telling that, wait a minute, you're so far away from what you know here. You've gone from a high-level manufacturer to a hospitality manager.
Yeah.
How does that compute? And it's
you're exposed in so many ways that you've never been exposed to before, and you just don't. It's such a different market, like
completely. And because it says golf on the top, you're like, oh well, no, it's the same. But sure, like we don't really give credit for the amount of high-level precision manufacturing that goes into a new golf club or a new golf ball, and the science behind it is nuts. And that's what that's what these companies are doing for the most part. I know they have adjacent like clothing stuff and other gear, but in terms of the actual factories and where the focus is going, it is really, really high level stuff. And then he's talking about the price of chicken wings on the call. Imagine if you're one of the top engineers there and you're like, wait a minute, why is this our focus now? So that really exposed them. And then on top of this as well, the capital requirements for Topgolf were fairly nuts. So on average, it costs about $30 million to open a new range, which if you've ever seen one, you can see why they're these massive outbills. They obviously have to be at least 300 yards long, huge netting. I think they can have tiered hitting bays, and it's just an incredibly large site needed. It's no small undertaking, and obviously needs to start earning cash quick to pay back the initial investment. And if you're seeing the sales dwindling from growing at 30% year over year to down 8% year over year, that equation starts to not balance out as they were playing. So last month, Callaway bit the bullet. It decided to spin off Topgolf as its own standalone business. Callaway is going to retain about $1 billion of debt from the deal, while Topgolf comes off with $200 million of cash, keeps all its leases, and it's kind of going to just operate as its own thing. Chip said, he said it much like a man that has learned a very expensive lesson, that Callaway is now going to stick to avid golfers, which is basically like, we took a swing at those 40 million people who golf but don't golf, that untapped market. It didn't work out. We're going to stick to what we know.
Yeah. Wow. I suppose it is a testament to the concept we talk about sometimes of, if you are operating in a niche market and you are doing well in that niche market, it sometimes does not benefit you to go looking for other people.
No.
Sometimes you just stay in what you know and try and increase pricing there, or just capture a few more people in that niche market than
that's 100%.
running off somewhere else.
Peter Lynch's diversification, like, to a T.
Yeah.
Yeah.
Yeah. Okay. So what's going to happen next for these two companies?
So as I said, Topgolf is kind of going it alone. It took in, I think, slightly under $2 billion in revenue last year. It's going to have a nice cash pile there to play with. It said, the report came out, it's going to be cash flow positive as a standalone business. It's also reining back its expansion plans. So I think its target was always 10 a year. It's come back to what it says, mid-single digits, so between 4 and 6, I guess. The issue is where the problems which made it such a failure on a Callaway continue, because there's a difference between running a Topgolf, or there's these new things now like indoor simulator sports bars, essentially. 5 Irons, one in America, pitched. Actually, the fella pitched just opened in Dawson Street, I think. And it provides a very similar service, which are indoor simulators, sports bar layout. Do you know what I mean? Perfect for that kind of corporate night out where you're going to bring in those people who don't golf but will golf. But they're obviously a lot cheaper to build and maintain. Instead of a 300-yard outlay, you need, you know, a wall and a couple of projectors. And for golfers, there might be a difference. But there is a difference. I'm not going to say there might be. There is a big difference between hitting a simulator and a real driving range. But remember, these facilities are more targeted at the kind of people who don't golf, who won't really notice the difference, who do this on corporate nights out only. They're not really going to be nitpicking when it comes to that. And then on top of that, to put a Topgolf in, you have to go to a place that has enough space, which is going to be outside major cities. To put in a pitched or a 5 iron, you can do it in the middle of Dawson Street. You know what I mean? So the competition there for what it serves is probably intensifying on top of everything else. So I'm not sure what will happen with Topgolf. I think people are going to be quite wary of it. I'd say it would hopefully get a buyout instead of trying to do it alone. For Callaway, I'd say it's kind of disgusted with itself. Since the merger in March 2021, the stock is down 66%. Now, if you look at that compared to Titleist, Acushnet, that climbed about 50% in the same time period. The difference is pretty glaring, but not only that, to lose 2/3 of your value at what we described as just a complete purple patch for golf is pretty jarring. So seeing the levels of growth and participation and its core business doing quite well, and yet your stock is down 2/3, it's a pretty big swing and a miss. Your man Chip he mightn't be in the hot seat for too much longer. That's a big mistake to swallow as a public CEO. So from now on, they're not carrying the burden of Topgolf anymore, but they do have more debt on the books. They've always kind of carried a lot of debt on the books. Probably won't be a huge ordeal for them, but yeah, they'll need to do an awful lot to claw back the kind of gap Titleist has gained throughout all this. That being said, in a perverse way, this could be the best time to buy. Do you know what I mean? You're kind of picking out the nadir of everything and being like, well, is Callaway going to go away? Do I believe that golf is going to continue on its strong kind of run? Is it going to stay as one of the top manufacturers? Those answers, like, you can convince me very easily to say yes to all 3 answers, and then it's like, maybe now is the time. So it's an interesting inflection point for the company. I think
Mm-hmm.
it's much more investable without Topgolf on the books.
Yeah.
But yeah, it's interesting.
Do you see any kind of brand erosion? I don't think like Callaway did a lot to like overly associate itself with Topgolf, but maybe a lack of focus, maybe in terms of the products that they were producing during the period, or is it still kind of
I think it's
as it was pre?
compartmentalized enough in the sense of Callaway golf clubs and Callaway balls aren't really
Yeah, yeah.
associated with Topgolf at all, bar if you were in a
Okay.
Topgolf and you might be using them. So
Hmm. Okay.
from that point
Mhm.
of view, I don't think we would see any degradation of brand.
Mhm.
Like we're saying all this as it literally changes name from Topgolf Callaway. Do you
Yeah.
know what I mean? But but yeah, it does seem like they're far enough apart. And it's what Chip Brewer said about avid golfers. I don't think avid golfers. Callaway had too much mind share for an avid golfer to be associated with
Yeah.
Topgolf, if that does make sense.
Yeah. Yeah. Okay.
Yeah.
Cool.
So yeah, that was an interesting one. I just love that you started that with Mike. Do you want to talk about golf? that might be
His
the
dream came
that
true.
might be the only time I ever get asked that question. But we're moving on to
Yeah.
Snapchat.
Yeah.
Yeah, which is one of those companies that always, I don't know what happens to Snapchat. It has like these 3 month
Yeah. Well,
cycles of either really positive or really negative, and then
yeah.
an earnings report will come around and inverse things. So
Yeah.
this actually came from Brian in the Horizon community. He was asking if anyone had ever considered investing in Snapchat. It remains incredibly popular with Gen Z and Gen Alpha. Gen Alpha, is that a new one?
That's the one below Gen Z. Yeah. They're the new
Jesus,
ones.
sorry.
Yeah. They're the iPad kids.
Yeah. So they reported yesterday. Well, sorry, they reported on Tuesday. Yesterday, time of recording. Amory, how'd they get on?
Mhm. Well, I think Snapchat wants you to think it did very well. And that was the headline that everybody published. But if we dig in a little bit, it wasn't great. So it beat on kind of every major measure that it likes to produce. So earnings per share, revenue, global daily active users, global average revenue per user. And the big headline that it produced was that it's doing a $500 million stock buyback. But things were a little bit funky in the market in that when it reported initially, it dropped by 8%. And then it's now up 12%. So it seems like analysts were kind of like, don't really know what to do about this. I think the stock buyback is what got them over the line. But I went ahead and dug in to these figures to kind of figure out what the real story was. And so we've got this big headline. Okay, daily active users have grown. They had 443 million this quarter. That's up from the 441 that was expected. 40% of these users are sitting in that 18 to 24 age bracket, which is really important for marketers. And so you're going, okay, that's a pretty solid job. But if we dig into that, the issue that they're going to have and that analysts are going to continue to harp on about is the fact that the growth in the daily active users isn't exactly in geographic locations that we would like. Something that every advertisement based business is going to talk about is the fact that the American market, the North American market specifically is how they refer to it, is the most important when it comes to making money off advertisement because the users are worth the most. Because advertisers spend the most in that region. And so an example of that is on average on Snapchat, a North American user is worth about $8.50, whereas their average user is worth about $3. And so you can see there just the disparity. And so you really, in order to continue to make money, you want the growth to be in the North American market because the rest of the world isn't generating as much. It's something like European users are worth about $2.30, and the rest of the global world is worth under $1.50. So you need to have that growth be concentrated in America if you want to be able to turning over revenue. And unfortunately, daily active user growth in the United States, not only is it flat, it's actually falling. So there was 100 million users this quarter. That's down from 101 million the same quarter last year. And obviously, like dropping by a million isn't overly worrisome, but it is an indication that they've either reached market saturation or the popularity wheel is starting to turn just a little bit. Whereas you compare that to the rest of the world growth, there was 16% user growth there, which is obviously great to think that the app is doing well in foreign markets. I know it's exceedingly popular in India at the minute, but those users are really difficult to monetize. And so
Yeah.
that's hard from a business standpoint. And this is the dynamic that
Problem
Snapchat has always had.
problem Netflix had as well, where they were getting unbelievable subscriber growth from India, but they couldn't really make any money from it.
Yeah. And again, like, as I just said, like that's Snapchat's perpetual problem. Yes, they are popular. Yes, they are growing. how do you make money from something that is effectively a messaging app? It's really difficult to get
Yeah.
advertisement in there without it feeling intrusive. And so that was okay. So we've got metric one unpacked there. That's not great. But average revenue per users increased, and it even increased in the North American market, which is good to see. It was up 9% in North American market, 6% overall. So, hey, they're making more money per user. Where is that growth coming from? You might want to be tempted to say, okay, that must mean that users are spending more time on the app, which then allows Snapchat to add more ads in so then they can sell more ads. Maybe it's coming from that, or maybe it's coming from the fact that advertisers have realized that the platform is really valuable. So they want to spend more money on it. They're buying up more ads. And unfortunately, neither of those realities is true. If we dig into the details that they provided within their quarterly call, essentially in Q3, Snap's advertisement revenue was about 1.25 billion, which was up 10% year over year. And according to management, that was primarily driven by growth in direct response advertisement. That was up 16% year over year. Direct response advertisement is like very digitally native, kind of old school internet advertisement, in that it's prompting you to do something immediately. So it might be a stagnant, flat picture that's just saying, hey, download the Amazon app, or hey, sign up to this email newsletter, or just click on our homepage. And from just personal observation, Temu ads are absolutely flooded onto Snapchat at the minute, with them just trying to
I've seen that
give
on
you
my
free
own.
offers.
No, I've seen what's the other one? Shein.
Shein,
I've
yeah,
seen the
where it'll be like, these pants are 1 cent.
crazy amount of ads on all social medias for Shein at the minute. Yeah.
Yeah, and so that's not really the kind of advertisement that you want to be overly concentrated in, because it's not super reliable. It's really, really generated by people having money and spending money right now. It's not incredibly reliable. And that is reflected if we move down further through the call, because brand oriented advertisement revenue was down by 1% year over year, because Snapchat is seeing weak demand in certain consumer discretionary verticals, including technology, entertainment, and retail, which is crazy to me, because again, if you're Disney, if you're an entertainment company, and you know that the vast majority of people on that app are under 24, don't you think you would want to be taking out brand advertisement on that platform? So that's not a great indication to see. And this is additionally probably reflected the fact that ad targeting on Snapchat is incredibly limited. You can only really pick a geographic location and an age range, which is a far cry from the ad tech that Meta or Google is offering. And so the global impressions on Snapchat, they grew by 19% year over year. But here's the key thing that they reveal in the management call, is that this growth was driven in large part by expanded advertisement delivery within the Spotlight and Creator Stories. So it's not being generated by the user growth. So effectively, Snapchat is making more revenue by pushing more advertisement onto the platform. And to me, that's very much a short-term solution. And that's reflected if we move down further through the call into the eCPM metric, which is effectively how much ad revenue you earn per every 1,000 impressions. And for this quarter, that fell 7% year over year, because inventory exceeded demand for spots.
Okay.
So effectively, this is a temporary measure. Snapchat is flooding the platform with ad spots to sell more ad spots, but it's on this really dangerous seesaw of, well, that means the ads are now worth less money, but it's okay because the volume is increased. But there's definitely going to be a point where you tip that over,
Yeah.
and all of a sudden you've ruined your product because there's too many ads, and now the ads aren't worth anything.
Yeah. Okay. So while the stock might be up, you're not impressed. What about Reddit?
No.
They reported on the same day. It's similar world, social media and advertising.
Yeah, they are. And Reddit really like blew this report out of the water. And so it is worth going through and seeing, like, okay, are they simply growing ads by pushing more ads onto the platform? We knew that ad tech was something that was going to invest heavily, and that was in its IPO documentation last year when we talked about it. And so total revenue in Q3 grew 68% year over year to 348 million. The advertisement business grew 56% year over year to 315 million. And that was driven by strong growth across objectives, channels, verticals, and geographies. And that's exactly what we want to see. Insane daily active user growth. So it was up 47% year over year. Logged in users was up 27%. Logged out users was up 70% year over year. And similar to Snapchat, we want to talk about US users. They're worth the most. American daily active users were up 51%. And a lot of this user growth is because of the issues with Google.
I was just
It's
going to
the
say,
fact that
is that
people,
all coming from SEO?
yep. 100%. We know Google adjusted their algorithm in order to benefit Reddit, but as well as that, according to Reddit in 2024 so far, Reddit was the 6th most Googled word in the United States. And it's from people putting whatever the question is, Reddit
Reddit.
at the
Yeah.
end.
So they want a
Yeah.
real person answer, basically.
Yeah, and this is something Reddit is now trying to capitalize on, according to management. Looking ahead over the next couple of quarters, they will be improving search experience on Reddit itself and then a broader SEO strategy. So this is something that they're going to keep building upon. Consequently, Reddit saw strong year-over-year growth in impressions, which was allowing it to sell more ads and to make more money. However, it was also acknowledged on the call that some of this is coming from adding more ads to the platform, because they're integrating them into the threads a bit more. Sometimes users find this intrusive. I think it's something that they're testing. They don't want to overly pollute the threads, if you will. But importantly, ad pricing on Reddit, according to management, this is a direct quote, is mostly consistent with the prior year. So it's not doing what Snapchat is doing, where it's pushing more advertisement onto the platform, but then decreasing the price per ad. It's the opposite. They're pushing more ads on and more users are using the platform, but the pricing is stable.
Yeah.
And so that's perfect. Like that's exactly what you want to see. And, you know, if you're a Reddit stockholder, you should be hesitant of them adding more ads, but you should be delighted to see daily active users growing, because that's exactly what you want to be, as well as that Reddit became profitable for the first time ever, which is crazy. And they are expecting more growth over the next year. So it's very interesting to keep an eye on. But again, you're on that seesaw of balancing user experience with your ability to make money.
Yeah, we were talking about Reddit last week. Emma was talking about the IPOs, and it kind of snuck up on us. Are you a user?
Yeah, I would use Reddit if I'm looking for opinions on things. Like if I'm watching a movie and I'm like, I wonder what people thought about this.
That's what people do on the internet. They look for opinions.
Yeah. Well, sometimes you're looking for fact.
I love when I'm on the internet and I just run out of opinions. I wish there was more.
Yeah. But yeah, I definitely do. And I definitely do exactly what they're reporting. I Google something and then I'm doing exactly what they're reporting. I type in a question and I put Reddit at the end of it and see what it looks like.
Yeah. Oh, the one thing I was going to ask about Reddit as well is they signed a big deal with OpenAI, didn't they? Sell them
they did.
user data. How much is that affecting? Like it's still 100%, not 100%, but like ads are still running the business there. It's not reliant on this at all.
Most definitely. Yeah, so it's 348 million came in for the quarter, and 315 of that was being generated from ads. Okay. That 32 million is from content contracts. They actually talk about that on the call, and that was crazy. It was up like 500% year over year, because obviously they'd never signed a content contract before.
Yeah.
But yeah, they expect further growth in that as well. But management's call was very focused on advertisement and implementing ads and increasing users and all that kind of stuff. Very kind of like reminiscent of old school advertisement implementation on Facebook and Instagram, where everything is wonderful and green and growing. But yeah, just being cautious of not polluting the platform, particularly when you're text based. So it's there's just like less physical space to place those ads. You know, you want to be kind of careful about it. But yeah, another thing actually that they talked about in the call in terms of ads, which is worth saying here, is Reddit has placed itself in an interesting space. It calls it contextual and interest-based advertising, which obviously is...
This is what I was going to think about. They have a really unique opportunity with their subreddits to customize exactly what they want to sell to.
Yeah, and basically give companies the ability to talk directly to a consumer that's probably looking for them. Yeah. You know, there's definitely massive Reddit threads talking about, hey, what are the best walking shoes right now?
Yeah.
Adidas can be in there typing up their own little response and going, hey, here's the 5 reasons we like this shoe, and here's a coupon.
Yeah, completely.
Like it's a really smart advertisement opportunity. But compare that to the Snapchat experience where you can't target anything. So like, you know, how are you supposed to find people, interested in Adidas shoes or interested in dog walking or interested in chemistry sets or whatever it might be? You have no ability to go and find those people. On top of that, Snapchat is largely children. And I know like many companies are trying to target children, you know, breakfast cereals and Disney and all that. But as we have talked about in the past with Robux is the currency and Roblox is the company. Yeah. But children are really hard to get money out of because you have to go through the child to the parent. And that's hard. Like that's a much longer sales cycle. Yeah. So yeah, Reddit definitely winning in this battle.
Yeah, and we could talk about Roblox in another episode. I think the one
Oof.
of the big short companies came out
Short report.
against, and it does not look good. But that's
No.
talk for another time. So let's finish up on Snapchat. So I think your sentiment, in spite of the green figures today, is very
Yeah.
negative. Is that correct?
Very. Yeah. Super negative. And I didn't even touch on the fact of the stock-based compensation.
Yeah, well,
Huh. Every
that's
quarter.
always been an issue. It's
Yeah.
what's the CEO, Evan Spiegel? Is that how you pronounce it?
Spiegel.
Yeah,
Yeah.
he's just basically become an absolute billionaire while the company
Yeah.
itself has made no money whatsoever.
Yeah, he basically is taking all the money that they're making in stock-based compensation. So Snap lost 253 million this quarter, and it paid out stock-based compensation of 260 million.
Yeah.
Come on, and they just laid off 10% of their staff to cut that down.
There's a very clear
Ugh.
issue here with what's going on.
Yeah,
Yeah.
yeah, yeah. I mean, to be fair, that's down. So for the last 9 months, they've paid out 783 million in stock-based compensation, and in the same period last year, they paid out 990 million in stock-based compensation. But it's not enough, guys. We got to
No.
pause this stock-based compensation. Yeah.
Yeah, I always remember he got lambasted for not selling to Facebook at the time for what, 2 or 3 billion
Yeah.
or something. Or
Yeah, yeah.
he was clearly right. He just stay in the business, but just bleed it dry for his own personal piggy
Yeah,
bank.
basically, and then let Instagram steal most of your features anyway.
Mm.
But they obviously have something that, like, again, it's that thing of Snap is obviously an appealing product. The like kids like it. The
Yeah,
usability is interesting. Like Instagram has not been able to mimic its conversational aspect. Neither is WhatsApp or Facebook Messenger or any of them. But it's just an impossible space to monetize because you don't want to be in somebody's messages trying to get money out of them. It just doesn't. It feels icky.
yeah. It's like it's done the incredibly hard part well, where it's like
Yeah.
you found this platform that engages this really hard to access age group,
Yep.
and then what do I do with it now? Do you know what I mean?
Yeah.
So yeah, it's always been a company we never really recommended. We talk about it because it always makes a big impact every earnings one way or
Yeah.
another, and it's never had a chill one. But yeah, it wouldn't be high on my list either. Now I have to say,
No, its most important role, I would say, on the market is it just is another way for us to try and measure where the ad market is moving. So they report before Meta. Meta hasn't reported yet, and so we now know, okay, advertisers are spending this quarter. So ergo, we should see strong advertisement numbers come out of Meta, as we saw come out of Google, and as we saw just now coming out of Reddit. So yeah, that's its main function to me, to be honest.
yeah. Okay, well, I think that's it. Anne-Marie, thank you for joining, and everyone, thank you for listening in. Remember, we still have that offer running. If you want to hear more about Nexus 2, you can just email in at pod@mywallstreet.com. That's pod at mywallstreet, mywallst.com. We can have all your information on the launch of Nexus 2 coming out in the coming weeks. Thank you for listening, and we'll talk to you next week.